Welcome back, students. Let's move straight to code of ethics. When we talk about ethics generally, ethics is seen as a unique selling proposition of professional account. I'm very sure we must have done this during our days of corporate strategic management and ethics. But in this, as regards this, we want to look at it with respect to this accounting field here. We're able to do business ethics, professional ethics, and all. Saw some ethical theories like relativism, absolutism, and all. But here we are just trying to narrow it down to the confines of the profession and in auditing and accounting as a whole. Now, when we talk about ethics, I said we see it as the unique selling proposition of professional accountants. As if they do not adhere strictly to the ethical principles, there's no way they can earn good fees. Why? This is as a result of paying some. You cannot be paying someone for advice or assurance if you do not actually trust them or believe in their work. As such, there are some ethical principles that should uphold us or that should guide us. And as such, we have professional bodies that regulate the auditing profession. They actually set high standards of behavior for their members, even including their student members. And their code of practice apply to all the members, whether in public practice or not. And these details of rules of conduct vary between professional bodies, but well, all the major bodies have a code that are broadly similar. And this particular, as regards this particular area that we'll be looking at today, we'll be looking at the IFAC code of ethics for professional accountants. That's the IFAC International Financial. That's the IFAC code of ethics for professional accountant, which has been published by the International Ethics Standards Board for Accountants, the National Financial Accounting Committee. That's the IFAC Code of Ethics for Professional Accountants. They have actually published something. To write something down. They have actually published something, which is they have published the International Ethics Standard. International Ethics Standard. Ethics Standards. Ethics Standards Board for accountants. So I call them the IEASBA, and the professional in I said that they have actually we are looking at the IFA code of ethics for professional accountants published by the International Ethics Standard Board for Accountants. We actually refer to as the code. We refer to as the code, quote and unquote code. So we have to be aware that ICAN has actually adopted the IESBA code in their own localized code, which has been called the Professional Code of Conduct and Guide for Members. So that's what we call it, the Professional Code of Conduct and Guide for Members. And we also have to note that the substance remain largely unchanged, more like we just copied everything word for word, and you get that's why I've said the ICAN code of ethics and conduct is based on the IESBA code of ethics, which actually set out certain fundamental principles about how its members should behave, and it also recognizes how its members could be subject to certain threats which would compromise their behavior, and I've actually suggested ways in which we are going to consider every bit of this, looking at the fundamental principles, the threats, and also the safeguard. Majorly, that's what we are going to be looking at today. So there's no need to actually disturb ourselves as regards, oh, what are we going to be doing today. Majorly, that's all what we are going to be discussing will be majorly from there. So now let's move on quickly. Let's consider the conceptual framework approach to the professional ethics recognized. We have the fundamental principle, which I've spoken about the fundamental principle. Fundamental principles. We have this, which are actually subject to threats. That is the threats of the fundamental principles. Then lastly, we have how the threats must be addressed, and this is what I call the safeguards. The safeguards that must be in place. Safeguards. And please let's note that this code applies. I've said it before. It applies to all members of ICAN and also to all ICAN students. So if you are a student member, don't say, "Oh, because I'm a student member, this code does not." It applies to you because one day you become a member. And we should actually note that it applies not only to those in public practice, probably the auditors, but it also applies to those in industry and commerce, those in business. It does not only apply to those in public practice. Please let's know that. Now let's look at the fundamental principles quickly. There's no time to check time. The fundamental principles. Number one, the fundamental principles are five. I call them the five fundamental principles. The thing is, at this stage, if you are not familiar with the five fundamental principles, then it's a sorry case because as an ICAN student, even at ATS level, it is being tested, the fundamental principles. And the thing is, you can have it tested under any course as it relates to ICAN. That's it. Can be tested under advanced audit and assurance, can be tested under corporate reporting. We have seen it several times. Can be tested under strategic financial management, can be tested under advanced tax, even in case study. It can even be tested in any mention it can be tested anywhere. So don't say, "Oh, I don't want to read this." No. It doesn't. It's not about you don't want to read it. You have to read it. So you have to understand the fundamental principles. Let's move on. The first one is integrity. Integrity. What we are just saying about integrity is that, a professional accountant should be straightforward and honest in all its professional relationships and business dealings. In all its straightforward. You have to be trustworthy. Straightforward. Don't be corny. Don't be deceitful. Straightforward. Uphold integrity, the integrity of the profession. You have to be straightforward and honest. Being honest. Straightforward and being honest. Okay? Honest. Then another one is objectivity. When we are talking about objectivity here, we are just trying to look at, a professional accountant shall not compromise professional or business judgment because of bias or conflict of interest or probably undue influence of others. So as a professional accountant, your yes must be yes. Don't let anyone put you under unnecessary pressure. That's why there are some things we have to consider that can actually expose the auditor to some threat of objectivity, probably the figures. I'm going to talk about this as we proceed. So please let's ensure that as an auditor, or probably you are a professional accountant and not in public practice, ensure that your professional judgment or business judgment are not being subjected to bias or probably a conflict of interest or probably having to issue it out under an undue influence of others. That's what we are simply talking about here. Let's move to professional competence and due care. Professional competence and due care. As a professional accountant, you are mandated to have a continuing duty to attain and maintain professional knowledge and skill at the level required of your clients to ensure that such client or employer receives a competent professional service. And please, if they are going to be receiving that competent professional service, it should be based on the current technical and the professional standards and some other relevant legislation. Imagine as a professional accountant or an accountant not in practice anyways, but public practice, you are not familiar with the Finance Act that just came out and how it affects your profession. You are not financed with the new amendments to the Company and Allied Matters Act. There are particular things that you should update yourself. We don't say, oh, because of I'm now qualified, it does not concern me again. Many people just gonna drop. You have to keep updating your knowledge. That's why you see most people going for mandatory continuing professional education, just to actually keep that level of competence, so that their clients can actually benefit from those particular standard or competent professional services. Now, a professional accountant, talking about due care, a professional accountant shall exercise or act diligently in accordance with applicable technical and professional standards. Whenever you are carrying out your job, ensure you do. Don't let it be subject to negligence. Don't take due care, necessary skill and due care in actually doing your work. Act diligently in accordance with applicable technical and professional standards. That's what we're actually talking about here. Now let's talk about confidentiality. I'm very sure this is not the first time we are actually hearing of this. When we talk about confidentiality, we are just trying to say that, oh, a professional accountant shall respect, or we respect the confidentiality of information that he has actually acquired as a result of his or her professional or business relationship, and as such will not divulge any such information to third party, except or without proper and specific authority. Like we can have situations whereby there are specific or legal professional rights or duty to actually divulge or disclose, then they can actually do so. But if they are not under any legal or professional rights or if it is in the public interest to actually disclose, you should not divulge such information. More like you are auditing a listed company and you have gotten some particular information. As a result, you're actually using it in the capital market, more like an insider dealing. Is actually legal, so you don't actually have to use or divulge those particular informations to third party that can actually use it. So you owe your client that or your business, the people you are working for in business, a duty of confidentiality, and it's one of the core fundamental principles of ethical code of conduct. Okay, and confidential information. I also have to squeeze this in, that confidential information must not be used for personal advantage. I said this earlier on, or of the professional accountant or third party. That's why I made mention of insider dealings, using information for your own advantage. It's not to go financial advantage. Lastly, let's look at professional behavior. In fact, this is one of the areas where I love so much, professional behavior. We are just trying to look at whatever behavior you are going to be doing as a professional, does it actually bring discredit to the profession? That's what we're actually looking at. And as such, we are just trying to say a professional accountant shall comply with relevant laws and regulations, and thereby he has to avoid any conduct that the professional accountant knows or should know might actually discredit the profession. So more like you seeing a chartered accountant fighting with a bus conductor in Lagos. Oh, give me my change. You will not do this again. It can actually bring discredit to the profession. During when I was actually receiving as a student, there was this class we were having then under now corporate strategic management and ethics. It used to be management governance and ethics then. So we're in this ethics class, and the lecturer was like, oh, explaining the same fundamental principles, and he made mention of professional behavior, that even as a chartered accountant, you must not be seen probably seeing a chartered accountant eating roasted corn on the road. And also, we all laughed and said, how does it, won't we eat? And actually, if someone sees you outside, we got to know that, okay, probably someone sees you and, oh, this is a chartered accountant. Okay, then the person will be like, oh, so this is how all of them do in their as chartered accountant. They eat on the road, they eat corn on the on the road, or probably, well, that was actually more of a sarcasm. So, and what we are just trying to say here is that, okay, as a professional accountant, just try to avoid things that will bring discredit. Follow all legal rules, regulations, comply with relevant laws. All these things would ensure that you are a law-abiding citizen, even to the profession and also to the country as a whole. So, as such, it won't be able to bring discredit to the profession. So please, let's move on. Let's look at threats. Let's look at threats to objectivity. Threats to compliance with the fundamental principles. There are some particular threats that can arise uh, in when we are trying to comply with these particular fundamental principles. Let's look at those threats. We have self-interest threats. Self-interest threats. And this particular threat can actually we can actually sit under it can actually influence independence, which in the long run also influence your objectivity. So when you are not independent, how do you want to be objective? Now let's consider the first one, self-interest threats. Or before we actually talk about that, let's just talk about threats generally. When we say threats to fundamental principles, we are just trying to look at it that okay, there are matters that could result in accountants or audit firm acting without integrity or without sufficient competence or without ensuring confidentiality or in a way that discredits the profession. And however, we are just trying to look at threats to the fundamental principles, which are largely threats to the independence and objectivity of the accountant or the auditor. Most of the threats to the fundamental principle usually come as threats to independence and objectivity of the accountant or the auditor. And this code actually recognizes the following general sources of threats to the fundamental principles. That's what we are actually trying to look at now. First of all, let's look at the first interest threat, the self-interest threat. When we talk about self-interest threats, this actually arises when the accountant or the audit firm has a financial interest. Simply put, has a financial interest. Has a financial interest. I think we are still going to look at this in detail as we proceed, but let me just explain each of these. Financial interest, has a financial interest or other interest, but mostly it usually be financial interest or other interest. Even those other interests can have financial interest embedded in it or other interests. Are we together? In a particular matter, and typically this actually means that the accountant's decision might be influenced. It may be influenced by that particular self-interest, and as such the accountant will therefore not act with objectivity and independence. So can you see that it's a big threat to the ICAN fundamental principles? Like, what are some examples of this particular threat? We can have in a situation whereby probably the accountant or the auditor has some shares, substantial shares in the company. You see that that's a party, he has a financial interest in the company, as such it's actually a threat to the fundamental principle of objectivity. And that one is when he accepts goods, or probably you see when an auditor goes to the field and all, you give them gifts and all, you are just trying to buy them on your side, and as such if the long run, if you are giving them gifts and not trying to do this, do that, in the long run the auditor will see that I'm having a particular interest. If I do this thing, if I do this particular thing to their statements or to their financial statement, it can actually stop this gift from coming in, or this particular. So, and as such, it can actually pose as a threat to your independence and objectivity. So, accepting goods, services, or hospitality from an audit client that are neither trivial nor inconsequential. That's what we are actually talking about. Let's look at self-review threats. Self-review threats. I'm just basically giving us what we need to know as regards this. I think we are still